This is FinTech Futures reporting from Sibos, and I'm joined by Floris Lugt of ING. Floris, thank you so much for taking the time out to speak with us today. How are you enjoying the conference so far?
Yeah, very good. Very good. It's huge.
Yeah, very big. Yeah.
And it's very impressive to see so many people, so many banks. It's great.
Excellent, excellent. Well, I guess just to get started then, we'd like to quickly introduce yourself and your role at ING then.
Yeah, so I've been with ING for 20 years. Currently responsible for the digital asset strategy within the wholesale bank.
Excellent, excellent. So I guess to get started then, I mean, how has ING's approach to DLT evolved in recent years, and what are blockchain use cases are now proving the most viable, I guess, in wholesale banking?
Yeah, so that's interesting. So ING has been involved in blockchain for about 9 years already. And initially it was approached from a very experimental way, from the sense we don't know exactly where it will move. We see a lot of opportunities. So let's try various things and see what sticks and what doesn't. And that worked well. About 3 to 4 years ago, we said, well, actually, let's now define a more comprehensive digital asset strategy. And that's what we set about to do. And that is more from the vision that there are a lot of opportunities that blockchain infrastructure brings to develop new payment opportunities for our clients, but also to be used as infrastructure for payment and financial markets, for example. And that requires not just new products to be offered to clients, but also infrastructure to be developed and to be agreed with other market players like other banks. And that's what we set out to do since then, in particular on payment side, because it's really an infrastructure that needs to be developed still largely, standards that need to be agreed among banks. And once you have that, then you are in a very good position to offer this as products to clients.
Excellent, excellent. Obviously, stablecoins have been a hot topic at Sibos this year. We're just coming off the back of news recently that ING was one of 9 European banks to launch a euro-backed stablecoin as well. So can you tell us a bit more about that and ING's role in that as well?
Yeah, I think that's a very good example of what I just mentioned. So we recognize that it's impossible to have markets without a trusted payment means, right? That's simply not possible. It's unheard of. And on blockchain, there is no trusted means of payment in euro yet. Of course, you have the ECB have the digital euro, but that's not on blockchain. And the wholesale CBDC that's being developed by ECB, but that's interbank only. So for B2B, B2C, and retail use cases to be developed on chain, another solution is needed. And then we recognized the power of stablecoins, especially because within Europe you have now MiCA regulation, which provides a very good regulatory framework around it, which provides trust as well. And then we said, okay, so stablecoin is a very good instrument to develop. We cannot do that alone as ING. We need to do that with other partners because you need one European standard. So, and there were other banks that recognized the same thing. So together we said, well, let's see if we can make this work. And eventually now we got to this consortium of 9 banks, really with the ambition to set one European euro stablecoin standard that all of our clients can use. But we want to be an open consortium, so it should not be restricted to the clients of these 9 banks. Not even restricted to the client of any bank that will join the consortium in the future. It should be available to all European consumers. So distribution can be done by any licensed player. Really, we see that as a form of infrastructure that we want to develop as a bank consortium to enable then more solutions and products to be developed by the banks for our clients.
Excellent. I guess, how do you see stablecoins transforming cross-border payments then, especially when it comes to settlement compared to traditional methods?
Well, I think so. As you know, right now, international payments, so mainly to outside Europe, because within Europe it's generally organized very well within the SEPA area. But outside, of course, cross-border payments go through many intermediaries, and therefore they're costly for our clients, and it takes time to settle, and therefore also not transparent. And stablecoin-based payments are immediately peer-to-peer. So they settle instantly or near instantly, and therefore they are less costly, more transparent, and more efficient to be used for our clients. So we see a lot of opportunities there, and we think that's going to be a big market.
Excellent. So I guess as central banks advance their CBDC research and development as well, how do you envision the relationship between CBDCs and private stablecoins evolving in the wholesale banking ecosystem?
Yeah, so the way ECB is thinking about this is the wholesale CBDC is really interbank, which is a very good solution. So that should be there also as trusted settlement leg of central bank reserves. Then we also need solutions for companies and for consumers. And we believe stablecoins can be one. That should not be the only on-chain payment means. So tokenized deposits are also a very good instrument that can be developed for and by banks and clients of banks. That will take a bit longer though to develop. So we think these three instruments, stablecoins, tokenized deposits, and wholesale CBDC can exist side by side and can be complementary to each other in the future.
Excellent. And we've heard about blockchain-based KYC solutions as well, showing promise for improved compliance processes. I mean, how might DLT evolve further then, I guess, to address other operational challenges in wholesale banking?
Yeah, that's a good one as well. That will take a while, I think. But indeed, essentially, you can tokenize anything, right? So any form of ownership you can tokenize and therefore trade, which is a huge benefit. But also, indeed, your ID. So anything that can identify you, so your ID yourself, or just to share the proof of KYC done by a bank, or your diplomas, or anything can be tokenized. And once you do that, and you can, it should be possible, and that's all to be developed. But for any transaction, for example, to identify yourself, just show this token as a proof. That token should be issued by a trusted institution. Can be a bank or it can be a government agency. This is you. It's trusted, it's verified, and instantly you are being identified. That is possible. So in the form of verifiable credentials, right? That is the technology that is probably the most efficient going forward. But there might be other ways to do it as well. But there's a lot of opportunities there. But again, these markets need to develop, and that is step by step. All the standards need to be agreed, which takes time. And we're very happy to work on this cash leg because that's an important first step that needs to be taken.
Excellent. Sounds great. I guess to finish off here then, what's next for ING in terms of your digital asset strategy? And is there anything you can tell us about now?
Well, what we're looking at, what makes a lot of sense. So now that the stablecoins, obviously, a stablecoin consortium, we will develop further or support the development of that. It will be a standalone entity that will be independently run, but we will be one of the shareholders and hoping to drive this consortium further. And then we have to look at how to distribute the stablecoin. So that will be up to each bank to individually develop their own strategy for that, for both retail and corporate clients. And in ING, we're going to investigate as well how to do that and how to serve our clients optimally and how to do that in a safe and compliant way as well.
Excellent. Sounds great. Well, thank you again, Floris, for, like I say, taking the time out to speak with me today. Enjoy the rest of the conference.
Thanks for having me.
Thanks.